Welcome to Web3 Watchdogs, the podcast that takes a deep dive into the world of Web3 security, compliance, and risk. Join Michael Pearl as he interviews executives from across the Web3 industry to uncover the challenges and opportunities of this rapidly evolving space. Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.
Hello, everyone, and welcome to the Web3 Watchdogs, the podcast that focuses on everything security, compliance, fraud, risk management. Basically, everything that is interesting in the Web3 space. And today we have with us a very interesting guest. We have Wee-Siang Lee. He is from Paxos, which has been in the news lately or throughout the last few years, and we're going to talk about that. So Wee-Siang is the executive director. He is on board of directors of Paxos. He's the head of Singapore compliance and MLRO, and he's the deputy MLRO of UAE. Wow, that's a long title, Wee-Siang.
Yeah, thanks, Michael, for the introduction. Yep, so all this is official. All this is my job title. I'll be sharing a little bit about how I juggle all the hats that I'm wearing as well. I'm happy to provide a little bit information about Paxos for those who haven't heard of the company before. We are a regulated stablecoin issuer, blockchain infrastructure provider, and today we serve some of the largest institutions in the world. Think of the companies like PayPal, Interactive Brokers, and Charles Schwab, just to name a few. We help them to integrate digital assets into their business. So yeah, today I'm happy to share not just about my experience in the technical side of compliance, but I also want to touch on, which I think is very important as well, the human side, how we think, how we build trust in this space, how we prepare for a future where AI, blockchain, and global finance converge. But thank you so much for having me on the show today, Michael.
Thank you, Wee-Siang, and this was a great introduction and a great segue into some of the things that we're going to discuss. But first, let's hear about you. So from what I understand, you built a career in compliance, primarily in kind of the TradFi space, right? So you were in Credit Suisse, you were in Counter Consulting, and now you got into Paxos. So maybe you can tell me about your journey, and also perhaps give me some clarity on this shift from TradFi to the crypto space, especially with respect to compliance, which I imagine is quite different in both worlds.
For sure. Yeah. So let's start from the very beginning. I actually started my career at Quanta Consulting right out of college. So that was actually my first real exposure to structured problem solving and stakeholder management. And there are so many transferable skills. It taught me how to listen. It taught me how to influence without authority, how to think strategically about business problems, which all turned out to be incredible, valuable skills later on in my compliance career. And after that, I moved into a compliance career, like you mentioned, in TradFi at Credit Suisse. I rotated across various financial crime compliance functions, very structured, very hierarchical environment. We had mature processes, and in many ways, I benefited from it because it served as a great foundation for what a mature program looks like. It also taught me the importance of documentation and auditability, which is very important in the banking space. But after a few years, I started to notice something, that the industry really wasn't evolving at the same pace as the risk. We had financial crime becoming more sophisticated, scam rings, which we'll talk about more, payments were becoming more digital. And yet, as you can imagine from a old-fashioned bank, tooling and frameworks in banking was still tied to a lot of legacy process, which takes a lot of time to shift. All right. So back in 2020, even while crypto was still seen as an outsider, I saw the potential for how blockchain technology can fundamentally reshape how money moves. It caught my attention. I wanted to be a part of this industry where compliance wasn't just about reacting to change, but really helping to shape it. I made the leap of faith. I joined Paxos as a compliance associate 5 years ago, which turns out to be one of the best decisions of my career. I very quickly realized that there's so much to learn. Within a few months, I was leading our Paxos Singapore's licensing work with the MAS, which really shaped my approach to compliance in crypto. I realized that the highest realm of compliance isn't just about following rules. It's also about understanding intent of the regulator, building relationships, influencing, co-designing frameworks, so that innovation can happen in a safe, responsible way. And yeah, these lessons have stayed with me throughout my journey at Paxos. I'm still learning as I go, but enjoying every part of it.
Yeah. Sounds really exciting. And I hear that a lot. Obviously, crypto has changed a lot, and now you see more and more people coming from, traditional banks, especially large, banks, banks, retail banks, and so on, coming to the world of crypto and kind of building the infrastructure because everything is so nascent, and you have to take the know-how from, the traditional finance world and to adjust it to make it suitable for the crypto space, and in some cases build things from scratch. So it's really fascinating seeing that and hearing all those stories. So I wanted to ask you about Paxos. So you briefly mentioned some of the activities that you have, and obviously Paxos is involved in so many projects, and it's doing it, jointly with other companies. So you mentioned PayPal and Bank of America, and in terms of the project, so obviously the PayPal stablecoin and the Pax Dollar and Pax Gold. Maybe you can give me, before we dive in to talk about those projects, because I would love to hear about them. Maybe you can give me kind of an overview of what is Paxos' role exactly in those projects. What do you actually do? What kind of value do you provide to those partners of yours?
Okay, sure. All right. So taking a step back, Paxos, we are a regulated blockchain infrastructure company. So our mission, which ties in with what I just mentioned earlier, right, is to take the financial system, which relies on processes built decades ago. We want to modernize it so that money and assets can be tokenized, can be moved instantly, safely, and transparently. So in the past, we had a crypto exchange before, but today we are not just a trading platform. We are not just an exchange. We are also the underlying Rails infrastructure. Right? So we power digital asset infrastructure for some of the largest and most trusted institutions in the world. For example, PayPal, Interactive Brokers, Mercado Libre. They serve crypto trading for the end customers, but underlying it, the infrastructure, we are a turnkey solution that allows their end customers to trade on the platform, but it's all powered by Paxos, right? So that's one part as well. At the same time, other than the crypto infrastructure phase of the business, we are also a stablecoin issuer. So we issue regulated digital assets and stablecoins, such as the PayPal US dollar, Pax Gold, and now we also to issuing USDG, known as the global dollar, which is one of the most highly regulated USD stablecoin globally. And all these assets are backed one-to-one by audited reserves operated under some of the strictest regulatory framework in the world. So I think since this is a podcast about compliance and fraud, I think it's important to highlight that what sets us apart is our regulatory DNA. If a bit about history of Paxos is we were the first crypto company ever to obtain a limited purpose trust charter from a New York DFS back in 2015. And that allowed Paxos to operate as, to provide virtual currency services, which allowed us to serve the likes of the companies that I just mentioned. And I think it's very timely that we're doing this podcast this week because last week we actually was in the news, like I mentioned. We received approval from the OCC to convert that DFS limited purpose charter to a national trust charter overseen by the OCC. So this actually means that all of Paxos US-based activity will now be subject to federal, and which is the OCC's supervision. And I want to highlight that this distinction actually makes PYUSD, Pax Gold, largest USD stablecoin gold-backed token that's issued now under federal supervision, right? So I think that's on the US side, but I know touching still on the same vein, we were one of the first companies to be approved by the MS in Singapore, right, as a digital payment token service. We are still one of the first companies to be able to operate a stablecoin, which is also EU compliant under MiCA, which is our USDG coin. And in general, we apply a very high global minimum standard, right, which gets all regulators comfortable. And it's this amount of regulatory standard, this high global standards and recognition that allows us to serve these, payments companies, these companies that want to bring digital assets into the ecosystem, and they're able to partner with us and be proud of it. So I think at a high level, this is a service we provide. And I also just mentioned how we use regulations really to distinguish ourselves.
Yeah, so it's super interesting. A lot to unpack. I would love to dive in to talk about, Pax Gold and to understand it a little bit better because it really fascinated me. And I saw some of the partners that you have in this kind of project, which is really interesting. I would love to understand the role. But first, maybe, something that came up kind of along when you were speaking. I'm trying to wrap my head around, the different regulation right now that stablecoin issuers and in general the stablecoin ecosystem is facing. So obviously we all heard about, the Genius Act in the US that opened the gates, and now even retail companies like Walmart and CrowdStrike, which is a cybersecurity provider, is now building a stablecoin, and obviously banks and so on. So maybe you can give me like a general overview of the different regulatory approaches around the world. Obviously, the US being the more interesting ones, but I guess the listeners are not familiar with what's going on in East Asia with respect to stablecoins. What are the differences between the regulations? What does a stablecoin issuer have to have as a minimum standard for issuing stablecoins and so on?
Yeah. So right now, the way that Paxos is doing it, we actually comply with three different prudential regulators. So we have the MAS, we have the MiCA, and also we have the Genius Act in terms of the way that they frame it. And each of these, sets out like clear requirements on how you actually have to do the audits, how you have to park your reserve assets. There are certain type of reserve assets that you can only park in, like short-term investment bonds and things like that. And so I think at a high level, that is the minimum requirement, which is basically that, that one-to-one backing. And there is a certain subset of investment assets that you can only park in, right? So I think there may be small variation. Like, for example, if you look at the EU regulator, they have certain requirements like 30% of the underlying assets have to be parked in cash, right? Which may diminish the yield of the stablecoin a little bit, right? Versus if you park it in, whereas the US and MAS allows for more parking in, the treasury bills, a higher percentage, so that actually increases that. So going to your question, I would say in general, they are not too different, but in a sense that all the focus is always on customer protection and on sure there's plenty of audits, one-to-one backing, plenty of the white papers that explain all the key risks to end customers, making sure that they're aware, knowing what they're signing up for, right? But there may be some variation in the investment sense. But I think the key next step that different various regulators have to address is really on the point of multi-jurisdictional issuance. And why? Because as you know, the whole idea of a crypto as a form of transfer is that it's borderless.
Mm-hmm.
And even using our blockchain monitoring mechanism, it's not very obvious where the holder of the asset is currently residing. However, each of these regulators, of course, have the requirement of parking reserve assets in their own home, under their own regulated entities, right? So there's the element of, I think, bipartisan, where the different countries and regulators will have to eventually come up with some kind of bilateral agreements amongst each other, just to make sure that if one entity, for example, one country or an entity overseas goes have some issues, that the country, the relevant governments will collaborate to make everyone whole. Because if you think about it, if the way that these stablecoin reserves are assigned is that each US dollar is backed one for one. The money is there. So customers across the board will always be made whole. We just have to make sure that the countries do not freeze the mechanism for funds to travel from one country to another country to make whole the customers of another country in the event that something unpredictable happens.
So wait, so that's very interesting. Let me see if I get this straight. So essentially, if I am to buy if I am to issue right with you, if I am to buy a Paxos dollar, right? Let's leave aside if it's the gold one or regardless, right? In principle, if I am to buy a stable coin, so I'm depositing one USD, right, into my bank, but you're saying that the reserve should be at the relevant country. So does it mean that you need to have a bank account or rather a reserve in each country, in each jurisdiction?
Yeah, so it depends on where the coin is regulated. Of course, as the whole world matures, and I hope that we don't eventually go into that state that everyone is protectionist by nature. If everyone is protectionist by nature, then every single country will say that they have their own stablecoin framework and they insist that Paxos will have to have a bank account in each of these countries, such that when the coin is circulating in a certain country, that dollar has to be parked in a reserve in that country, through that entity. So there is a possibility that we may go down that route. But I think until that moment is happening right now, as long as a country's regulatory framework does not preclude that, then that is not the requirement. But but the point being that if a coin right now today is indicated to be issued from an entity that is maybe from the US, and the US has certain requirement that says that if even if it's circulating across the world, if it's circulating across the world, right? If it's issued out of the US, then this $1 has to be parked in a reserve assets in the US, for example. Then that is where the country specific requirement of where that dollar comes from. But of course, that all this talks about multi-jurisdictional issuance, if you're following the news, it's very new in the industry. So there's still a lot of talks, and the ECB and a lot of the different people are having different views. So I think that there's a lot more to come in this space.
Yeah, that's very interesting. Yeah, I guess that in Europe it's going to be easier because, again, it's just my hunch, but I think that, the government of Spain will not be, or rather, the Spanish regulator will not be opposed to the money, being stored in, let's say, Estonia, right? So that is probably solvable. But when it comes to, a person from Asia wanting, from some Asian country, let's say from Singapore, wanting to buy a stablecoin from a US based entity, then maybe it's going to be a little bit more complicated. But I wanted to ask you. So we talked about the fiat side of things, which again is fascinating. I learned a lot. Let's talk about the on-chain side of things, right? So correct me if I'm wrong. The way that it works, the actual issuance is essentially a person is depositing, USD. The issuer is receiving confirmation from the reserve bank, right? Saying that, yeah, indeed, we received this dollar. And now you're minting a token and sending this to the wallet of the relevant person, right?
Effectively, yes. So I think the whole flow is, you have a customer. The customer deposit a US dollar, has to be an onboarded customer with us or one of our partners. There is a minting and burning mechanism, right? So we will only mint an additional unit of a coin when there's a correspondent US dollar
Mm-hmm.
bank account already, which we will then, in the process of minting, we will simultaneously deposit that $1 into another bank account, which is for benefit of that token user.
Yeah.
And then that bank account will definitely have some legal safeguards on that. And at the same time, from that bank account, the investment will have to be made in a way that coincides with the relevant stablecoin framework.
So the account needs to be kind of segregated. So it is kind of labeled under that person that deposited the funds, right?
We will have a ledger, a way to do a
Yeah.
thing and stuff like that. But from a perspective of in the bank account, right, it's just, we have a reconciliation process. I don't want to go too deep in the detail because
Just in with a broad brush.
the operations and finance. But yeah, I mean, at the end of the day, we do daily reconciliation, right? So like basically to match against the on chain, how much tokens we are owing the customers, how much tokens are out there circulating, and then how much we have in our bank accounts. And you know what? It's a very transparent process, right? If you go to our Paxos websites and all the audit reports,
Mhm.
all there on where all the US dollars are currently safe at, what kind of investments are there currently being made. Yeah. So I think all these are very important because it really is the what that generates trust. And stablecoin is a very commoditized space right now. So the way that we believe the next wave, right, is really to partner with enterprise partners, and enterprise partners to want to partner with a crypto infrastructure company who want to make sure that that stablecoin is well regulated and is a trustworthy one.
Yeah. Very interesting. Very interesting. Yeah. So I understand how it works, but what I'm curious about, with respect to the minting and burning, right? Obviously, the most sensitive thing that you have with a stablecoin is to have that one-to-one backing, right?
Yes,
And to have it in a very precise way. And I'm imagining that also the scrutiny from the regulator is around that, right? To have an
exactly.
exact correlation between the fiat reserve and the actual tokens in circulation, right?
That's right.
So my question here is the mechanism that is minting and burning, right? The smart contract itself, it's probably the most sensitive mechanism there is, right? I mean, especially when we're talking about large cap stable coins, right? So
Mhm.
it needs to be protected in the best way to make sure that no, and we saw that, by the way, with obviously smaller altcoins and so on that were hacked into and minted or burned. This can cause an immense problem for the issuer. So maybe you can give me some clarity on obviously you were thinking about it, right? But what kind of measures do you take to protect those smart contracts from being manipulated?
Yeah, so a lot of it is, I would say operational hygiene factors. So I think in the
Mhm.
past you've probably heard about a lot of hacks that's been happening in the industry, right? And hacks, and it's not just about like I think ties into the point about um making sure that the whole mechanism of minting and burning stablecoins is there as well. Is not affected by a hacker. But at the same time, even for other crypto exchanges, making sure that the assets are there and not being lost to hackers are also at the end of the day is there. So it's not just about the blockchain technology, but I would say a lot of it is also about the operational and human layers. Because if you actually dive deeper into it, many of the biggest hacks today, they aren't really about failures of the blockchain. They aren't really about the failures of the technology. It's about failures of basic operational hygienes. We are talking about like maybe poor private key management. We are talking about maybe over reliance on a single custodian, or we need internally insufficient segregation of duties, or weak internal access controls, or lack of independent oversight, or I'm just naming a few. So things
Yeah.
like so I would say, it's like Paxos takes this to heart. We recognize that the industry really needs to shift from being reactive. Instead of cleaning up after breaches, we need to be preventive as well. We have built a strong discipline at Paxos around controls, operational rigors. Some of the safeguards you have to put in place to prevent any of those from happening, like we mentioned, is making sure there's multiple layers of cryptographic key protection. We make sure that there's a rigorous internal and external audits before any code upgrade goes live. Making sure that we have a continuous monitoring to detect unusual patterns or anomalies as well. Independent reserve attestation to verify the backing of stablecoin and that it's truly there. Regular penetration testing and stress testing to validate the resilience of our systems under different threat scenarios. I honestly think that we have to assume that every control can fail.
Mhm.
So even when we have designing systems, we think 2 steps ahead. We think about, okay, look, if this shit hits the fan, so how can we contain it? How can we rapidly isolate it? And what's the recovery? Yeah, so I think at the end of the day, the question isn't how do we stop issues from happening? How do we
Mhm.
stop a bad actor attack? Is also about, I think the key crux is how do we build a resilient ecosystem where if this ever happens, we want to deter it, but if it ever happens, how do we contain it? How do we detect it? And how do we prevent it from escalating into the truly catastrophic loss?
Yeah, I totally agree with that. And that is something that we also see at Cybers that for the most of it, many of the hacks that happened this year were not due to, issues of actual access to the wallet or the smart contract, but oftentimes it's, social engineering, basically attacks that derive from social engineering and things of that sort. So I totally agree that having robust operational practices and hygiene, as you mentioned, but also, like you said, real-time monitoring and detection and some preemptive measures as well. I totally agree with you. And I also agree with the last part where you said that any system can fail, right? So at the end of the day, you need to prepare yourself for it and you need to have the right protocols to follow in case it does.
And that's why our jobs are so important, right? I mean, your vendor solution is important, and my job, from a regulatory and risk perspective, is what at the end of the day, this industry runs on trust. And we
Mhm.
have seen previous news over the past. I think things are maturing, but in the past 3 or 4 years or so, we have seen many of those that diminish a bit of the trust. We are finally at a state that a regulatory clarity is coming, and institutions are starting to dive their toes in. So it's also a plea to the rest of the industry as well. Everyone, let's put our act together,
Yeah. Yeah.
so that we can grow this industry.
For sure, for sure. And from security, let's switch to kind of your bread and butter compliance.
Yeah.
Because I'm also interested when it goes the other way around, right? When a person is actually cashing out on their stablecoin and want to receive their USD back, right? So once a person deposits a stablecoin that has already been in circulation,
Mm.
what kind of measures do you take to identify whether it's illicit funds, what's the source of the funds, and so on? Maybe you can give me some more insights on that.
Yeah. I'll say, a lot of it is very basic, right? Like in the sense that it's common knowledge that like um these customers, when they want to redeem their tokens or want to provide services through Paxos or like any other exchange, they have to do KYC, right? So they have to be fully onboarded. And of course, a lot of it, there'll be a risk rating of the customers based on like things like their nationality, their source of wealth, their source of funds, where they come from, where they're currently staying, and what's the purpose of the account. All this should be, and by this point, should be programmed such that you calculate a risk rating. And then from the risk rating, if the risk rating is high, they'll usually, different exchanges will have their own enhanced due diligence protocol. We reach out to ask for even more corroboration of the source of wealth and source of funds, right? And also, that would be, on the onboarding side at the start. But sometimes customers, they onboard, then after that, the next step will then be they'll make the transaction activities, and then that transaction activity will be very completely different from what they profess. And that's where your monitoring process should kick in, right? Your real-time monitoring, or post-transaction monitoring. This person said that he was going to transact like $10,000, but ultimately start to do wave, like millions of dollars, rapid in and out, and things like that. And then there has to be a mechanism in place to, quick detection, quick preventing the customers from making these kind of transactions, reaching out to the customers to asking questions, and if necessary, you do the necessary regulatory actions. So I think we'll be trying to do early detection through good KYC, and after that, good transaction monitoring, and then a good investigation and escalation process. And all along the way, I would say, I also want to highlight that especially in Asia, been a lot of like scams and money mule things happening. So when we take these actions fast, it's not just about, we are really protecting some of the folks out there, right? There's a true real human impact, and the ability to, be able to prevent funds from flowing out in real time it gives one a lot of satisfaction and a sense of purpose, knowing that what you're doing has real impact out there.
Yeah, I totally agree with that. And one of the things that I'm always amazed to see in this industry is the fact that people are talking about security. I think that the awareness is already there. But with respect to fraud and scams, people are not really aware of the magnitude of that. So just to give you some numbers from our end, this year we detected $30 billion in fraud and scams being lost in fraud and scams in the crypto space. And we actually prevented 600 million. But obviously, the prevention, again, from our side, we're doing the best we can with our clients.
That's
From
right.
the aspect of the clients, of the facilitators, right? I'm talking about exchanges and wallets. This is something that they should be more minded about. And
That's right.
you are obviously the other side of the coin, so to speak, because if you are able to block the incoming funds that derive from those frauds, then obviously you make a very strong impact. That's for sure.
Yeah, and since we are still on this topic of scams, I just want to highlight that a lot of these scams, right? They are like no longer just typical financial crime, right? They seem to be like long form psychological operations. It's crazy, right? So the criminals, they don't just try to hack systems, right? They are in a way hacking human emotions. If you look at some of the case studies, right? They build trust over months. They study, they look through your profiles and understand you very well. They study your vulnerability. Then they will isolate victims socially, emotionally, before they eventually ask for money. So I think it's a unique challenge for compliance teams, right? Because sometimes by the time a transaction hits the blockchain, the real damage, the emotional manipulation is already done. And in fact, sometimes like I always hear the banking side people say they tell the customers that no, you cannot make this transaction, but they insist, no, this is my love of my life. She's in trouble or he's in trouble. I need to send, things like that. So I would say, I think sometimes the traditional form of transaction monitoring alone isn't enough, right? So it's like we really have to rethink our approach and just think about like behavior-based analytics and think about the human layer strategy, being able to collaborate with law enforcement fast. Because at the end of the day, we are all our own ecosystem. Right, Michael, your vendor has a solution, and then for us, we can only see whatever we can see. But the law enforcement, they know, they see other things. So if we want to reach the point that we can be easily accessible by law enforcement and be able to receive a call and say, okay, Wee-Siang, please freeze these funds, and this is our approach actually.
Yeah. Yeah, I totally agree with that. What you said about the psychological, process that these fraudsters are causing their victims. It's fascinating to see that. You see that, there's a lot of thought behind it. And by the way, there's also a lot of technology behind that. because it's obviously easier to do it en masse when you have AI now, and it's much easier to impersonate with the the deep fake technology that you have right now. It's a brave new world, and I agree with you. It requires awareness, requires great tools, great vendors, and it also requires some common sense from the users to not fall victim to that.
Yeah, and interestingly, like if you think about it, a vast majority of, or rather almost all crypto exchanges and this kind of business, the KYC is non face to face, right? Yeah,
Yeah.
so this and non face to face, and it's actually a lot of these transactions that's coming in, is the norm for the transactions to flow out fast. Because a lot of them use it as a fiat on-ramp, off-ramp, or they move it to the private wallet. So, all this, are just additional points that complicate in a world where AI is happening, and where the criminal syndicates, like you mentioned, right, a lot of these systems and the well trained criminal syndicates are actually abusing scam victims or the money mules, right, in a way that does a lot of coaching. They actually coach these people like exactly how to bypass like compliance programs. Yeah, so I mean that's just one remark that I wanted to make as well.
Yeah, that's a very important point. So before we wrap up, I would love to hear, and I really would love to understand better, Pax Dollar and Pax Gold. Maybe you can give us some clarity about that. What's the difference? And by the way, also, some people are kind of seeing, all stable coins as the same, right? So it would be very helpful to understand what is the differentiation
Sure.
between these tokens and the ones that perhaps people know best, USDT, USDC.
Sounds good. Right. So I would let's not talk about Pax Dollar, because Pax Dollar is not a product that we are actively pushing. But let's talk about our US dollar stablecoin, which I did mention at early on, that is one of the most regulated in the world. So
Mhm.
USDG, the
Mhm.
global dollar. So the
Mhm.
difference of the global dollar is like a consortium coin, right? So Paxos is the issuer. We have something called the global dollar network,
Mhm.
and it's been a fast growing network. 1 year ago, it was like we had 6 founding partners. We had around like 30 million in market cap or less.
Mhm.
So fast forward to 1 year later, we have more than 100 enterprise partners. Some of them are some of the largest in the world, like WorldPay, OKX, a lot of the large enterprise. There's a website, you can go and check it out, but
Mhm.
there's a lot of enterprise partners. Right? So market cap today is 1.45 billion. So it went from like 30 million 1 year ago to $1.5 billion, and that's a very fast growth. And I think the key difference for the USDG is, as a consortium coin, the enterprise partners themselves are incentivized to push this coin to be adopted by the customers. What I mean is, like, for example, our enterprise partner A, I don't want to name companies, so enterprise partner A will be incentivized for allowing their customers to make payments. They'll be incentivized to mint more of the coin. They'll be
Yeah.
incentivized to hold more of the coin on the platform, right? So we offer a kind of rewards for these enterprise partners more so than many of the coins out there. So what this means to the end consumers is that in the long term, they'll be getting a lot more use case. They'll be getting a better experience for these coins, because these enterprise partners, then they are across the board. They're not just crypto exchanges, they're payments companies or whatsoever. They are basically being incentivized to think of new use case, making the experience better so that they can make better transactions, so that it's more sticky on the platform. So that's the use case part. But at the same time, if you think about the regulatory aspect of it, like we mentioned,
Mhm.
it's regulated. We comply with the stablecoin framework for MAS. We comply with EU regulations, and at the same time, we're also moving towards OCC charter, and so this also means that it's complying with the US as well. So we basically comply with so many different regulatory frameworks, and all these are audited. So compared to some of the stablecoins out there, we are safer, well regulated, and so this is also probably the reason why this product has been hit in the market in a very short period of time. We already hit this kind of market cap, this kind of corporate partners, and we do expect we have a lot more in the pipeline that's also joining and listing and incorporating it into their platform. So this is on the US dollar stablecoin, the USDG front. Very proud of this, because initially when it was first started, it was first issued out of a MAS regulated entity. It is still issued out of a MAS regulated entity, but the fact that we have a global product. We have a
Mhm.
global product that started off with a Singapore a kind of entity, and we are basically being able to fly this Singapore flag high
Mhm.
across the world as this coin gets used globally. Right. So
Mhm.
as a Singaporean myself, I'm very proud. Okay, so that's I'm very happy that I get to share this with the broader audience. But a second part of it as well, is also the Paxos, right?
Mhm.
So Paxos, interestingly, right, is a product that is we don't really actively feel that we need to push it. It basically feels like it's a product that sells itself. So
Mhm.
like for every token of the Paxos on chain, right, we basically put an equivalent amount of that value of that gold in a vault
Mhm.
in UK.
Mhm.
So with that in mind, people you no longer have to think about it from like the safekeeping costs. You no longer need to think about like if you buy a gold, like you can only buy it when it's a high quantum, because with Paxos you can buy it at a low quantum. You can break. That's what the value of tokenization,
Mhm.
right? And then the quick ability to make transactions, and we are seeing Paxos being listed in more and more avenues right now, and it has crossed more than $1 billion in market cap. It continues to grow without us having to market it. But I think the key distinction for this coin is that because of the OCC regulation that we got, so now this Paxos is now under the regulation of, under the supervision of the federal regulator in the US as well. This adds trust to it all, because at the end of the day, everyone can tokenize gold, right?
Yeah.
But about the credibility that Paxos have created over more than 10 years of operations, in the past we have, issued so much billions of stablecoins. If you aggregate it all together, there's an element of credibility that people applies to the Paxos name, right? In terms of the funds are truly there. So this is so when we think about Paxos, a lot of the people that go for Paxos, what do they want? The reason is because they want stability, right? I
Yeah.
mean,
Yeah.
it's a more of a stable product. If not, there'll be a
People still miss the gold standard, so now they're seeking it in a more kind of modern way.
Yeah, correct. So we're putting it in we're taking a gold standard, putting it on the blockchain in a modern way, and we add credibility and safety to it. So I think that's the pitch for this coin product.
Listen, Wee-Siang, it was fascinating. I think that you with your help, we managed to go beyond, just the superficial hype about stablecoins,
Yeah.
and to fully understand, maybe not fully, but to understand to a deeper level how it works, both from the operational point of view, security, compliance, regulation. So I think it was fascinating, very valuable. Kudos to what you're doing at Paxos and in Singapore. And thank you so much.
Thank you so much.
Thank you.
Web3 Watchdogs is sponsored by Cybers, your one-stop shop for Web3 security and threat mitigation. Cybers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cybers.ai. That's CYVERS.ai.